Hello and welcome to the Money Charts channel. Today's date, well, it's the start of day number 11 and the start of week number 3. Traditionally, that is. My name is Derek. All bets, trades of the like within each his own risk and their own reward. This has been volatile for the day number 1 was February 24th, a couple of Mondays back. Entire week of volatility, every single day, monster moves. And none of these days did we get any settling in or lowering within the volatility. We start this day off, another Monday. We left the 18 average of lows on the daily time frame here on the S&P 500. And as we can see, gapping lower right down to the previous lows that it had on the February 28th session. And it's just volatility is in store for the day on the weekly chart for the S&P. And we're going to just show a lot of the markets. We're going to go into gold, silver, even cryptos. Although it's not a traditional market, traditionally speaking. So S&P 500 on the weekly. This is just a very, very spare setup when you have this red candle down and then this move like this. The Dow Jones looks even funnier. I'm just going to put that one up and then move on to gold after it. But the Dow Jones, I don't think it's going to update this until the morning. But yeah, this is just, when you see this, and this is just some of how it worked within the intraday stuff throughout the last few weeks. We can see how it closed on the week within this 18 average of highs, and obviously falling below it right now. So let's move on next to gold. And it's up higher. Gapping up right now at 16.95. It is 6:45 p.m. Eastern Time on Sunday, the 8th day of March 2020. So we see how it's breaking out from this 18 average on the hourly. This is a good intraday nice setup as far as how it started the day off. We had a gap higher on the 1 minute term, gapping up to 16.95 after closing on Friday at 16.73. So at up 22 or a little over 1%. And right now we're pretty much at the open now, barely above. And all this little bit of up and down choppy action. Then we have this interesting failed breakout that occurred in here earlier a few minutes ago as I'm doing this. And look at how it's recovering. Comes into the 18, breaks it above it at 18.36, back down the 18 lows. And it looks like on this 1 minute term, this thing is ready to pop. This is going to be a very, very interesting week as we are now entering day number 11 of this wild traditional market volatility. As we enter this on the daily chart for gold, I mean, just an amazing, extremely bullish setup. When we have this 18 leave March the 4th the way we do, the setup on Friday, and we're just getting the continuation that we would expect. We're breaking this key Fibonacci. We resisted it the first time. Decent, very good price correction within the 18. We've seen the strength again, how it's leaving it, just like a lift off, propelling on the Friday session. So when we look at this moving forward, weekly chart, I mean, we're at levels now not seen since. Well, if you just move it back like this, well, that's not going to work. I'm just going to have to delete that and go like this. There we go. We're at levels we haven't seen in the US dollar fund going back, and we've already gotten above these highs. We're back to like December of 2017 or 2012, December 2012. 7 and a quarter or so year highs. We're at levels as was breaking out above in the summer of 2011. And this has just been a phenomenal ride. And there's a lot of fundamental news, of course, driven, that's going to will just make this market most likely to continue to have a good chance, I think, of moving higher. On the Canadian dollar side, we have gold at 2,300 now at all-time highs and up 2.5% against the dollar. Not 1% and change. No. 2.5% here on the Canadian side of things. On the monthly chart, it just continues to make all these new all-time highs. It's had a very good, clear-cut, good break above this level of resistance. I see the ascending triangle that it had when it started with these lows, a resistance break, and just an amazing clear break that has went above it. And how long ago were the all-time highs? Well, this 1 minute time frame, it's kind of like I don't know about the calculation on it, but 23.11. But the Canadian dollar against the US dollar, This is what its daily chart looks like. Down 1.16% for the day, which for a currency is a pretty extreme move. In the weekly chart, we can see that it had excitation here, and now it's coming down to this previous low. I guess the lowest area for that support is 72.7 area. Then we got the 2016 lows next at about 68.8. And on the monthly chart, failed breakout attempt here in 2017-2018 time frame, but we're also seeing a situation leaving down here where it does look as if maybe this has a little bit moved lower. So the US dollar is gaining strength on the Canadian dollar. Now, as far as the US dollar index is concerned, or the DXY, it's down, and it has been going down a lot. 95.42. So the Canadian dollar is gaining on the US, and the dollar index against all the other currencies, including the Canadian dollar, is down 0.75%. So the Canadian dollar is getting even more crushed against currencies that the US is also getting beaten by. And we have a situation here where the highs made levels not seen, obviously, since before we can see on this chart. And the lows, well, we're at lows now seen since 2019 back in February. So we're at over 1 year lows after making highs not seen. And let's just take a look at maybe a weekly chart. And we can see that these were highs that were basically last seen in 2017. So we made highs of about 3 year highs and then 1 year lows, just boom, 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 just like that. So big failed breakout that occurred here. And now it's having a significant breakdown below this level in here. Now, as far as the Canadian dollar against the euro, this is what we can see here. We can see a same sort of deal. Breakout here, failed one, and just a big move. And then now continuation today for just big moves down. Let's take a look at crude oil next. And this is getting serious because I'm scared to look at bonds. I don't know how bonds is gapped up. I didn't know crude oil gapped down to 32.50. It closed at 41. Crude oil is down 21.27%. This is getting crazy. This volatility, as it's had a monstrous move. These are big red candles down that's occurring now, heading back towards these previous levels of support. We've already dipped through this one, reaching this one in here. If these don't levels go, we're going to be talking. I mean, we have crude oil down here at levels of like $11. And then maybe we'd find support on the way at around 20. That's what could be transpiring. Wow, that would be a very, very interesting level if we can go back. If we do end up going back to the levels that were seen throughout mainly the 1990s and even through the end of the 1980s as well. But really, really large volatility in here. We can see just before this event, this was going on. And then let's just take a look at the 1 minute time frame. How is this? I'm not looking at this for the first time. This is just crazy. But yeah, just $32 for, and now I'm just scared to look at bonds. Let me just do a react to it because I have no idea. Okay. Okay, which one do we want to do? Don't want to do Russian, that's for sure. Treasury bonds, 10-year future, probably that's the best one. Alrighty, let's see what comes up. If this doesn't look good, I'll just go to TLT, I suppose. Oh, this is a 1 minute time frame. Daily chart. Well, it's going up. And I'm not gonna give you any type of, I don't even know what the open with this would be. So I'm just gonna give you what I already know. And that's the TLT. Let's get this one done. On the daily chart on Friday, this, I don't know. I'm just scared to see. I mean, is this thing going to be like up to like 187 right now? I wouldn't be surprised if it was. In fact, I think this is just going to keep going higher. I'd be very surprised if it's down. I'd be curious to why. I mean, this is, and this volume we have on the spike here, this is day number 11, week number 3 we're entering. We are in crazy, crazy times. And I got more. I still need to talk about this because I think these times are crazy. So then, weekly chart. This is what TLT's been doing. It's at levels like OMG kind of levels. I mean, this is its monthly run. So I can draw support in. Like, I like to do stuff like this. I'm looking at charts because this is stuff you did as a kid. Just draw the lines, connect the dots, basically. You almost can go a little fancy, like a little curvature around here. But how do we do the rest of the support? I guess we go like this. And now what do we do? I mean, what are we doing like this now? I mean, it's just getting parabolic crazy. As far as resistance is concerned, I guess you could do like the same sort of... Ooh, baby, that was just a nice wild ride. And I know I've drawn the support in, but I mean, this is just crazy stuff. And I want to finish this off within what I think is important about situational analysis. The volatility that we're having in here, when we just look back at all these previous periods, it's pretty much the similarity of this here. Maybe if we have anything bit more, it's the difference between this and this of 2018 to now is from the top in here, it was able to do this type of movement in here, having some up and down choppy action with good volatility before it had this only large sell lower. And that's what a lot of the times these corrections do. They'll have a bit in a little lower move. This one, it just started from leaving the 18 lows and it just kerplunked right off the bat in the first few days. As in here we had situations like these points, this little point, these little points, just little small amounts that would go below it, but every single time it went below it, it would just hold. But this time, a decent sized move. So now continuing looking back further, we can see a good decent correction in here. Again, I'm trying to compare how big these moves are compared to the past. If I look at this, say, on a weekly chart, doing the same thing, we can see that this is just a little move here, similar to that, similar to that. I mean, even this is nothing. So obviously, if we get anything even larger than what we have, then we're going to be looking at volatility of 2008, 2009 levels. And the size of this red candle down, 12% down. Oh, what do we got here? We got this is down 7. This one here down 4. So, I mean, where do we got big down moves in here? What's this one? This is down 7. Okay, my memory's terrible. 12? Were we down 12? No. Yeah, 12. Oh, my memory's better. Okay. My memory's not as bad as I thought it was. Anyway, so 12% we were down. What do we see in here? We have 18% down. So that's 2008. Okay. We have, again, that's 3%, 4. I mean, this is the biggest volatile move we've had since the crisis. This down move here was 6%. And again, we have 18% down in 1 week. Well, it looks like that's the biggest weekly decline that the stock market has had. Now, of course, when it was doing all this, we were seeing the market in here go from 13,000 and doing its normal, just not as volatile transition lower, to when it had its big Lehman Brothers type September and all that fall. It was leaving 11,000 already down about 3,000 from the high, which would have been about 20-ish plus percent before things got serious. And that kind of volatility came in. So I think what's very important to note in here is that we've already had this, and the next point would be if these first levels, like we see, these are the ones I talk about, that's the support hold going below. Well, yeah, that happens. If it doesn't hold, like it didn't in 2008, at least on the early points, like we can see how breaking down below the 18 in 2007, 2008 time frame just didn't succeed, and then boom, per clunk move. Are we headed for one of those per clunk moves where we'll fill some of the empty space? Because the empty space in here would have been from, we got all this empty space from this low to this high, and we filled it all from this low and a bit more. And then from this low in 1987, it didn't fill much at all. But everyone likes to talk about the 1987 market as a crash and intra move, a very short term intra move, whatever you can call it that, I suppose. And the move is large, but this was one that was successfully right off the bat to succeed because it took 2 days in going down. It was a 2-day move. It left the 18. I mean, it already was down 6% on October 5th week. It had the next week down 9.5%. and then down 13, falling from the 25 handle down to 16. But not much sustained action in there. A lot of the sustained action was at the 1900 level to start, and then down towards 18 or so for a very shorter period of time. And therefore, it lost about okay, so we'll just do like 300 and change up to 500, so 700 change. So 30% or so decline. And that's a crash. Now, I need 50. 27. Technically speaking, if you're looking for a 50% number, 2733. Well, I need well lower than 1400, and 1400 was down here. And it recovered that level. It didn't break down that November session, and then once it got to the 18 highs and started to show strength at the 18 highs for the first time in February of 1998, well, from that point on, it was nothing but higher highs and higher lows with every single one of these moves. Okay, this one is just support. This is a little bit of a shakeout here, just a little small one, but nothing much. And you see, after that shakeout was done, it comes up in here, finds support, and good times would roll again. So crash, no, it's just an intra move, just like this during the silent crash of the 1970s. Silent because, it looks like it's sideways, and it was, but that was just a damn bad period that inspired via that of inflation along the way. Okay. Now, I don't think that there... oh, yes, there is one more market I wanted to talk about. I remember, yes, I got to talk about this. I looked at this about 2 days ago. It's a stock, actually. Deutsche Bank. Bye-bye. Bye-bye. Yeah, bye-bye. This is what the chart was telling me. We'll see. Bye-bye. That was... Okay, I know I say that in my videos, and this is a copycat from the start. It was an SNL episode, and there's a clip on YouTube, or on the internet. I don't know if it's YouTube or not, where David Spade is in an airplane, and he's like an attendant greeting everyone goodbye out of the plane, and people are asking questions, doing whatever. It's like, I don't care, bye-bye. And just, it was kind of funny skit. And since then, I know me and my friend at that point, we did that whole bye-bye thing for sickly days and weeks upon end. But I was a really large fan of Saturday Night Live, and I still am, but for the era of Eddie Murphy, up until the excitation of my great stars of the late Chris Farley, David Spade, this Mike Myers, Kevin Nealon, the late Phil Hartman. There is just so many of them that was on that list. Alrighty, Deutsche Bank. Okay, failed move, fast move. Oftentimes when a failed move in one direction, you get a fast move in the opposite. Can you see the most recent failed breakout by chance? A possible one? Yeah, okay. We had this level of resistance in here, which broke up to this level on this weekly chart. Almost like all the dollar charts too. Kind of interesting how they kind of coincide, I suppose, because they're in the similar breakouts. I'm going to assume right now that this baby's gapping down here, but I guess we'll see on that. But this is that must-hold area. And the fact that it had a big spike down to go there, albeit better than one, to do it and even two, but to do it in 3 days to come down here and then just continue lower move. If you see weakness amongst this little area here, and most certainly I'm seeing that, well, that's not a good thing. And it shows to me that it's probably, not interesting fundamental situations might come into play. On the daily chart, I know with all these gaps it looks so bad, but still, continuous moves lower, not getting any buyers coming in for any sustained amount of time or any sustained price levels. And that's showing that exact statement true on the single hour term time frame. Barely making any moves to it. Again, not too high, not extending it, and then just leaving it really quickly. It's just taking the entire Friday session just like this below the 18 average of lows. And now we're at this point where even if it were to rally up to 8 now, are we going to resist that area it was supposed to support the entire time? Okay, I'm going to do a big video later about Bitcoin. It's not a traditional market, and it doesn't trade with it to the degree, but Bitcoin is having a big down day today as well. And I'll wrap it up with gold because it was looking good on the 1 minute time frame. I'm really curious to see how it looks But on the 1 hour term, we've had the move come out yesterday at 11 o'clock, and we've already seen the price go from 92 down to 81, en route to 77. I've talked about this for a long time, and I was busy yesterday, and I've already talked about this stuff. I've already talked about this inverted head and shoulder stuff and pattern like this. Gold. I'll talk about this later tonight or into tomorrow. Probably, well, I'm going to be busy tonight too, so I can't guarantee it. 1.3%, that's a small gain, it looks like, on the 1 minute. If even. Still trying to break that pattern out. We had the excitation in here on the 1851 stamp. And then coming back down in here. And even this last minute here, just buyers coming in. And it comes back down. You see this. If you get sustainability, it starts to draw an uptrend, especially if you're able the next like 3 or 4 periods to... what did I just do? Did I add a line that I didn't need? Yeah, this is like a line I don't need. Sustainability, that's what I'm talking about here is if you have a spot like this where you have a gain, buyers are coming. It looks like this thing's going to break out. The opportunity at the 1905 stamp came in. This is big news. If something like, say, an uptrend that can continue, something like that, is to come into play, meaning that sellers aren't coming in at these lower end prices and buyers are at least going to drive it up a little bit higher than what we've been seeing the last few minutes. Thus, it would start over the next 4 or 5 periods to see the 18 average of lows start to rise because you'd be making higher lows and then making higher highs. Or at least you're going to stop the downtrend on it. But basically what I'm saying is you have a move like this. You have a productive sideways movement that's going to probably stay within the 18 highs or barely go above it in a few periods. That's a bullish sentiment. And usually oftentimes after that, don't be surprised if you get some good kick-ass moves that would follow suit there after that. Thank you for tuning in to this video and have yourself a great day. And be careful with these markets. If you're looking for profiting within them, I'm sure there's lots of ways, but there's going to be a lot of people that are going to be making and losing a lot of money. A lot of wild stuff is going to probably continue to come into play, both fundamentally and this whole almost everything bubble that we're going through. I truly believe there's a very good chance of what we're seeing, that the straw has finally broken that camel's back. I almost want to think of a little, put a parody. Get this nice little 1,000 pound or however big a camel is. They're bigger than humans. And then just take like the smallest size straw and then boom, camel falls. Well, just as a comedy joke. But yeah, I do think that there's a decent chance that could be it. So for years and years, I've been accumulating precious metals for obvious reasons. Thank you for watching this video. Bye-bye.